Hello everyone. So I hope your studies are going great. Obviously, with exams round the corner, it should. Today I'm going to discuss this chapter, deposits, with you all. Yes, sometimes I don't know why we find this chapter a little confusing and we just don't know why we cannot remember. However, we are just going to discuss the main important points of this chapter here today. But I'm not going to discuss this topic, what is not deposits, which is again a very important part of this chapter because I have already covered that in quite detail in another video and you will find the link of that video in the description box below. If you find this video helpful in any way, please do leave a like and a comment because that gives us the motivation to keep making such more kind of videos for you all. So coming to the chapter deposits, deposits is obviously another form of raising money by the company. And what is really very important to remember here is, please do remember two things here. First of all, whether company can accept deposits from the public or not. So the first question, and you need to obviously remember the answer to this. The first question is whether every company can accept deposits from the public or not. And the second question is whether a company can accept deposit from its members or not. Now, as far as public is concerned, please, the rules and the laws relating to accepting deposits from the public is very stringent. So, it's not that every company can go and accept deposits from the public. So, the question that arises here is that which company can actually accept deposits from the from the public, and that is eligible company. So, only eligible company can accept deposits from the public. So, what is eligible company? It's given under section 76. And what 76 says, let's understand this. If a company, a public company, so please understand, what is to be understood here is that a private company is never an eligible company. It is only and only public company which is an eligible company. So if a public company has a net worth of 100 crores or more, or any one condition is enough, or it has a turnover of 500 crores or more, right? So I repeat again, if a company has a net worth of 100 crores or more, a public company has a net worth of 500 crores or more, or it has a turnover of 500 crores or more. So two figures to be understood here, net worth of 100 crores or more or turnover of 500 crores or more is considered to be an eligible company, and such company can accept deposits from the public. That means no company other than an eligible company can accept deposits from the public. Correct? I repeat again, that means no company other than an eligible company can accept deposits from the public. As far as accepting deposit from the members are concerned, every company can accept deposits from the member. So please, to be understood here is that first thing, that only eligible company can accept deposits from the public. What do I mean by an eligible company? It is a public company. It's a public company with a net worth of 100 crores or more or turnover of 500 crores or more can accept deposits from the public. As far as others are concerned, that is from members, every company can accept. Yes, obviously there is a slab here. We will go into that slab, but except that every company, if it is within the slab, every company can accept deposits from the members. I hope it's clear. Till this point, it's clear to everyone. This is very important. Do not forget it. So, it is only and only a public company which can accept deposits from the what? Public. If the public company is an eligible company. And to be an eligible company, your net worth should be 100 crores or more, or your turnover should be 500 crores or more. Correct? Now, if this company wants to accept deposits from the public, it has to pass a special resolution. It has to pass a special resolution in the general meeting. You already know what is special resolution. 75% votes in favor. Coming to the rules again, we will come to it in a little while after we see the slabs. So what is the slab for acceptance of deposits from the public or from the members? What is the slab? Now, when we talk about an eligible company, we can have two types of eligible company. It could be a government company or it could be a non-government company, right? If it is a non-government company, from the public, it can accept 25% and from its members, it can accept what? 10%, right? From the public, it can accept 25%. From the members, it can accept 10%. Now, 25% of what? Of paid up capital plus free reserves plus securities premium. So if the company is an eligible company, it can accept deposits from the public not exceeding 25% of its paid up capital, free reserves and securities premium, and on the other hand, it can accept deposits from the members not exceeding 10% of the paid up capital, free reserves and securities premium. Again, if it is a eligible government company, it can accept deposits from the public and the members not exceeding 35%. 35% of what? Paid up capital, free reserves and securities premium. That means what? If it is a government company, there is a single slab of 35% without any bifurcation of members or public, right? There is a single slab of 35% without any bifurcation for members or public. So I can accept 35%, no slab or no bifurcation for members or public. But if it is a eligible company which is not a government company, then we have a slab. From public you can accept 25%, from members you can accept 10%. I hope it's clear to everyone. I hope till this point it's clear to everyone. Correct? For other companies, that is companies other than eligible companies, for them the slab is 35%. Again, we know already what is 35% of paid up capital, free reserves and securities premium. So if it is eligible company, it can accept deposits from public up to 25% and from members up to 10%. That is not exceeding 10%. If it's a government eligible company, 35% from both members as well as public. If it is any other company means a public company which is not an eligible company, correct? A public company which is not an eligible company, it can accept 35% of its paid up capital, free reserves and securities premium. Ma'am, how much from public, how much from members? Well, this 35% is from members. Why? Because from public they cannot accept. Do not forget this, because except eligible company, no one can accept deposits from the public. So this is 35% from the members. There is no right, they are not allowed to accept deposits from the public. I hope it's clear to all of you. Yes, and if it is a private company, then in that case it is how much? 100% of its, again the same, paid up capital, free reserves and securities premium. So I repeat it again. Eligible companies can accept deposits from the public. What is eligible company? If your net worth is 100 crores or more, or turnover is 500 crores or more, you can accept deposits from the public. If it is an eligible non-government company, 25% from public, 10% from others. If it is an eligible government company, 35% from public and members, no such bifurcation, how much from public, how much from members. If it is a other company, other means any company other than eligible company, that is any public company which is not an eligible company, in that case 35% from the members, nothing from the public. Private company, nothing from the public, from the members up to 100%. I hope it's clear to everyone. Yes, I hope it's clear to everyone. Now, so let's just see it here. Where do I find all of this? So if it is a company under section 73, that is, it is not an eligible company. It is not an eligible company. They can accept deposits of 35%. And if it is a private company or if it is a specified IFSC public company, then in that case 100% of the paid up share capital, free reserves and securities premium. If it's an eligible company, from the members 10%, others, that means others here means what? Public, 25%. If it's a government eligible company, 35% of its paid up capital, free reserves and securities premium from both public as well as members. Right? There is no such what? Bifurcation here. Then another thing is there, if it's a private company which is a startup, okay, if it's a private company which is a startup, there is no limit. That is, it can be more than 100% also. There is no limit. If it is a private company which is a startup, there is no limit. It can be more than 100% also. If it's a private, we don't have public company which is a startup, there is no such concept at all. If it is a private company which is a startup, there is no limit. Another case, there is no limit. If it is a private company which is not an associate or subsidiary of any other company, that means it is not an associate of any other company or it is not a subsidiary of any other company, and this company has borrowings from bank, financial institutions or other body corporate, that is, it has taken loans from whom? From any bank or financial institution or any other company, and such loan amount, right, such loan amount does not exceed twice the paid up capital or 50 crores, whichever is lower, right. That is, if the borrowings of such company from this bank or financial institution or body corporate does not exceed twice its paid up capital of 50 crores, whichever is lower. What does it mean? Let us say the paid up capital. Let us say the paid up capital is 50 lakhs. Okay. Then what is twice the paid up capital? It is 1 crore or 50 crores, whichever is lower. Which is lower? 1 crore. So, if the total loan from the bank or the financial institution or any other company together is less than 1 crore, right? It is less than 1 crore and the company has not defaulted in the repayment of such loan, then in that case, there is no limit to how much deposits they can accept, right? There is no limit to how much deposits they can accept. So I repeat again, this limit, this slab does not apply in case of a private company which is a startup or a private company which is neither an associate or a subsidiary of any other company. And if it has taken loan from any bank or financial institution or any other company, and this loan amount does not, the aggregate loan amount does not exceed twice the paid up capital or 50 crores, whichever is lower, and the company has not defaulted in the repayment of such loans, then there is no limit as to how much borrowings it can, how much deposit it can accept. Now, it can be more than 100% also. I hope it's clear. So, let's just see the slab once more. First of all, eligible company. What's an eligible company as given under section 76? When we talk about eligible company means a company whose net worth is 100 crores or more or whose turnover is 500 crores or more. Such company can accept deposit from the public. And the slabs of the deposits is, in case of an eligible non-government company, 25% from the members, 10% from, 25% from the public, 10% from the members. In case of government eligible company, 35%. In case of any other public company, that is, which is not an eligible company, 35%. In case of a private company or specified IFSC public company, 100%. And there is no limit if the company is a private company which is a startup or a private company which is not a subsidiary or associate of any other company, and such company has taken loans from any bank or financial institution or any other company, and the aggregate of this loan does not exceed twice its paid up capital of 50 crores, whichever is lower, and the company has not defaulted in the repayment of this loan amount, then there is no limit. I hope this is clear to everyone. This limit part is actually becomes a little confusing. I hope it's clear to everyone. Now, for an eligible company to accept this, deposits from the public, they have to pass a special resolution. However, under section 180, if I repeat it again, if the present borrowings and the proposed borrowings, present means whatever borrowings it already has, even deposits is a borrowing only, whatever deposit it already has and whatever it is planning to take. If all of this does not exceed the paid up capital or free reserves and securities premium, then in that case the company need not pass a special resolution, an ordinary resolution will be sufficient. So, in case of an eligible company, to accept deposits, they have to pass a special resolution. But if the total borrowings, the present as well as whatever they are planning to take, that is proposed, the total borrowings altogether, if it does not exceed its aggregate of its paid up capital, free reserves and securities premium, taken together, as I said, aggregate, then in that case, an ordinary resolution is sufficient. It need not pass a special resolution, right? And one more thing here, they have to obtain a credit rating every year. Credit rating, which will kind of, they will grade your credit worthiness, and the better grade you have, that means your credit worthiness is higher. You are a company which is a more reliable company. So they have to get a credit rating every year. If you are an eligible company, you have to get a credit rating every year. So I hope till this point it is clear to everyone. I hope till this point it is clear to everyone. Before we go into section 73 and the rules, I hope this is clear to everyone. Yes, so we'll continue now. Now, obviously, whenever coming to the rules, whenever the company, so all this is given under section 73. And whether you are an eligible company or you are a non-eligible company or a private company, public company, you have to follow these rules. But yes, in case of a private company, certain exemptions are there. So we will come to those exemptions. But before that, let us just talk about what are the rules. Obviously, I have to pass a resolution in the meeting because you're doing something, you're accepting something, you have to get the consent of the members. Then a circular has to be issued by the company. Now, what will this circular contain? This circular issued means obviously I cannot issue it to the public because only eligible company can accept deposits from the public, no other company. So when we say circular issued, that means it has to be sent to the members, right? To all the members. What will this contain? It will contain the financial position of the company, that is, what is my financial position. It will contain the credit rating that it has obtained. Then it will contain the total number of depositors, that is, has amount due on the previous deposits, not default, due. That means it is not yet time to pay that money. And any other particular required, it will be sent to all the members, and it will be sent in the form DPP1. It will be sent by the company by registered post, speed post, or electronic mode, any mode that the company wants to adopt. So, but then always remember, whatever I give to anyone, a copy of it has to be filed before that to the registrar, right? So, a copy of it has to be, and what is the time? Obviously 30 days. So, a copy of this has to be filed with the registrar before I issue it to the members. So the circular, and again the circular will also be published in an English and a vernacular language newspaper. Then if the company has defaulted in the repayment of deposits, then in that case a statutory auditor's report has to be given that the company has, whatever default it had made, the company had repaid that money and 5 years have lapsed. That means if the company has defaulted in the repayment of deposits, the time criteria is that 5 years must have lapsed from the day the deposits were made good. Only then you can accept the deposit. So, the certificate of the statutory auditor has to be given along with DPT1 that we have not made any default, and if a default was made, the company has not committed default, and if the company has committed a default, it has made good the default and a period of 5 years have lapsed. So I repeat again, the company has to give to all the members a circular. This circular shall state the financial position of the company, then the credit rating of the company, the total depositors that the company has as on that day, the amount due on the deposits, and any other particulars required. It will be sent by registered post, speed post, or by electronic mode, and it will be sent in DPT1 to all the members, right? It will also be published in the English and the vernacular language newspaper. The company also has to give a statutory from the statutory auditor a statement that we have not made a default in the repayment of the deposits, and if we have already repaid it and 5 years have lapsed from the day the repayment was done. Then again, and obviously every year we have to give a fresh circular. You cannot give one circular and that will go on for years and years. No, every year a fresh circular has to be given. And as I told you, you have to file a copy of it within 30 days before the date of issue. Before, it is always before, as I already mentioned it. Before you issue it, within 30 days before the issue, you have to file it with the registrar. Now, everything you do, you have to go and tell the registrar. Khatam. Now, there is this deposit repayment reserve. It is basically to maintain the liquidity. Otherwise, what will happen? The company will say, I don't have cash, and it will make a default. So, we should have some liquid cash so that there is no default in repayment. So, then next financial year, in the next financial year, whatever amount will mature, I repeat again, in the next financial year, whatever amount will mature, by 30th April of this year, the company should keep 20% of it aside. This is actually just to maintain the liquidity. So, in the next financial year, I repeat again, in the next financial year, whatever amount will mature, 20% of the amount shall be kept in a separate bank account with a scheduled bank by 30th of April this year. So, by 30th April, at least 20% of the deposits maturing during the following financial year shall be kept aside with a scheduled bank in a separate bank account called the deposit repayment reserve. So, let's say next year, 1 crore is the amount which will mature. So, today, by 30th April, the company shall keep 20 lakh aside in the deposit repayment reserve, and this money shall be utilized only for the repayment of the deposits. That is, it shall be utilized only to repay the deposits. I hope it's clear to all of you, right? It's clear to all of you. Now, till this point, whatever we have done, there was a point about insurance also that's omitted. Till this point, whatever we have done, okay, this will, there is an exemption here actually. So, as I said, till this point, whatever we have discussed under section 73, all of these clauses will not apply to a private company if the amount it has accepted as deposits from its members does not exceed 100%. So, if the total amount that it has accepted from the deposits from the members, if it does not exceed 100%, then all these provisions will not be applicable. That is, they don't have to issue circular, file a copy with the registrar, or maintain deposit repayment reserve. They don't have to do any of this, right? Or if it is a private startup company, or if it is a private company which is not an associate or subsidiary. Remember all these points, which is not an associate or subsidiary, or the loan amount that they have taken from any borrowings from any bank or financial institutions or any company does not exceed twice its paid up capital, or 50 crores, whichever is lower, and it has not defaulted in the repayment of such loans, then in that case these points will not apply. The last one, which applies to every company, if they have issued the deposits as secure deposits. Okay, if they have issued the deposits as secure deposits, they should create a security on the assets of the company. And if the security on the assets is not created, then such deposits will be termed as unsecured deposits, and that they have to mention in every future circular. They have to mention this in every future circular. So I repeat again, if the company has issued the deposits as secure deposits, they should term the deposits as secure deposits, and they should create a security on the assets. And if they fail to create security on the assets, or only part of the security is created, then in that case they have to term that deposits as unsecured deposits, and in every future advertisement they should mention this fact that the deposit is an unsecured deposit, right? So they should create security. If the deposits are not secured or partially secured, they will be termed as unsecured deposits and shall be quoted in every, matlab future mein kuch bhi you do, you inform everyone that we had unsecured deposits, unsecured deposits, unsecured deposits, right? The slabs we have already done. Now, before I go into this section 73, okay, all these rules. Please understand, when we talk about a company, I can put such rules and restrictions, right? But if it is a banking company, or if it's a financial institution, or a national housing finance company, for them, taking loan is a very ordinary course of business work, right? For them, the normal course of business is taking money, giving loans. So if we put a restriction on these companies, how will they even do the work? It's not possible to put restrictions on these companies. How will they do the work? So this restriction, this clauses, this section does not apply. This section shall not apply to a banking company, a non-banking financial company, or a housing finance company, right? So it does not apply to an NBFC, a banking company, or a housing finance company, or any other company which is specified by the central government after consulting the RBI. So it does not apply to any of them. I hope it's clear to all of you. And one last important rule here: the minimum period is 6 months. The maximum period is 36 months. So the deposits cannot be for less than 6 months, cannot be for more than 36 months. They are not for very long term. So maximum period is 36 months. Minimum period is 6 months. It can be less than 6 months, but it can never be less than 3 months. Minimum is 3 months, provided these deposits, which will mature in 3 months, does not exceed 10% of the paid up capital, free reserves and securities premium. So the minimum period is 6 months, but I can have it for less than 6 months if it is minimum 3 months, and the total deposits which will mature in 3 months, right? The total deposits which will mature in 3 months does not exceed 10% of the paid up capital, free reserves and securities premium. I hope it is clear till this point. It is clear to all of you, right? Section 76 we have done. Section 73, along with the important rules, we have covered, and we have also covered section 76. Now coming to 73 and 74 and 75 is more of the deposits accepted before this act, when every public company was allowed to accept deposits from the public. So just the transition, sections, not going into that. Last, section 76A. This is basically a penalty provision. If you have made a default under section 73 or 76, what is the punishment? If the default is made under section 73 or 76, we have just discussed 73 and 76. If a default is made in that, the company shall be, obviously the payment of amount has to be done. But we will not stop there. We will also penalize you, right? We will impose a what? Fine. So they have to give a fine which is not less than 1 crore or twice the amount of deposit, whichever is lower, but which may extend to 10 crore. So what is the minimum fine? 1 crore or twice the amount of deposits, whichever is lower. whichever comes to lower, that one, right? And the fine is how much? 10 crores. Maximum is 10 crores. So let's say the amount of deposit accepted by this was 20 lakh rupees. So twice the amount of deposit is 40 lakh. So what will be the fine? 40 lakh will be minimum fine, maximum will be 10 crore. Or let us say the amount of deposits accepted is 2 crores. So in that case, what is twice the amount of deposits? 4 crores. So it will be what? 1 crore is the minimum fine and maximum is 10 crores. Obviously, officers will also be punishable. So officer of the company who is in default will be imprisoned up to, which may extend up to 7 years. They can have imprisonment which may extend up to 7 years. And so it is both, not one. It is not, you can settle with fine. No, imprisonment will be there as well as you have to give us some fine also. And fine which is not less than 25 lakh but can extend up to 2 crores. So in case of officers in default, 70 is, imagine 70 years you will spend, you will die there only, lifetime imprisonment ho gaya wo to. And fine which is not less than 25 lakh but can extend up to 2 crores. And if the officer has contravened the provisions knowingly or willfully to cheat, to deceive the company or the tax authorities or the creditors or the shareholders, anyone, to deceive them, obviously we will have more penalty here. Then you will be liable under section 447. We have already done section 447. So you will be liable under section 447. So I repeat again, if the company is in default, the company's minimum fine will be 1 crore or twice the amount of deposits, whichever is lower, but it can extend up to 10 crores. And in case of officers in default, and for the officers in default, minimum imprisonment which can extend up to 7 years, not minimum. And it is and fine which is not less than 25 lakhs but can extend up to how much? It can extend up to 2 crores. And if the officer has done whatever wrong he has done it knowingly, right, with an intention to maybe deceive the company or to deceive the shareholders or to deceive the tax authorities or the creditors of the company, then in that case the punishment, they will also be prosecuted under section 447. I hope this was helpful to you. Thank you. Happy learning and stay motivated. Thank you so much.